Well, good evening, everyone. Scott Henderson, shooter. It is November 23rd, Sunday, about 7 p.m. Of course, at the end of our presentation, please do review our disclosures. All right, let's jump right into this. Okay, we're going to go over our primary waves fundamental trends article. All right, let's start off with the first chart here. Let's go over the SPY. There's a good possibility we're done here. However, the most logical structure is this ABC structure I have up here. So that's our A. We'll get a B here, maybe back to about 660, 670, 665, somewhere around there. And then we put in our C. I still don't believe that this is done here, but if we look at the history of this tape, we don't like to put in ABCs on the SPY. We don't. I mean, we get something like that here. Something like that here is an ABC. This is clearly an impulse down. And here, this is clearly an ABC. So the structure that I've measured is this is equality. I think it also could be an impulse. So this would be 1, this would be 2. 3 should come in right at the shelf, which happens to be right where we have a decent sell side imbalance and other sell side imbalance right below there. So, when we have that confluence, by the way, when you see that yellow bar, it's telling you that we have both sell side and buy side imbalance at that point. So it's a dominant zone. So we are very likely to bounce, at least at that 50% line there. It might not stick, but we're likely to bounce. And then if we get our 3 in right at the top of that shelf, we'll put it 4 a little bit higher, and then 5 should come back to this X target. And the reason is I think we need an impulsive wave. I just can't imagine that this gets followed up with something shallower. It's just my talk. So this is the ABC here. I measured it. This would be an elongated version or extended version. This would be an elongated version. All right, let's look at the NASDAQ. Much deeper. However, I think the shelf holds. And part of it is because we're this sell-side imbalance is. In other words, we tried to recover and it rejected and took out this zone. So that's a very important zone here. Should have some buyers show up right here, but notice I didn't even label it. Looks like a clean ABC structure to me again. I did not draw the extended and the elongated pattern for this. Reason is much deeper drawdown through Lux Algo as far as how it sees it. And I do think that's our 5 here. Now the question is a little different. We don't have as clean a peaks in the SPY as we do here. So this is peaking drive 2, this is peaking drive 3, and they're very symmetrical and close in space. Notice the difference in the space. Equality is something that's important when a tape finds its top. Now, the next question is this whole wave peaking drive 1? That could be the case. So we still haven't got enough fear of loss here where people are selling all their positions. The institutions that are just constantly buying pieces here, they're not going to stop unless the market breaks something. So until this shelf breaks here, they're not even looking to trim. They're just hedging their risk. And we can see that in the tape and the positions that are there. So we get really bearish. We break below this 500 level, but I don't know that we're going to see that here. We need a major catalyst for that to occur. Okay, let's go to some of our names. Let's look at Unity. Now, I like this lower high that it put in. I was a little concerned with this breakdown, but after I saw this week, that's very constructive for me. We didn't even get into the prior sell side amounts. Notice this: sell side, buy side, sell side, buy side, sell side, buy side, sell side, buy side, sell side. What did it was? It tested 9 times, 10 times. We built a little shelf here. So when we get above that line, we break. So the fact that we got a higher low here and we didn't get into that line indicates that we're putting in a higher shelf, just like this whole shelf right along here. We were just putting in a higher degree shelf here. So I would think that we get up and test this $51 pretty quickly. Then we sort of find our base, maybe another higher low there. Maybe we do get back up to the 65 or 70 range fairly soon. Lux Algo sees that number between 51 and 61 based on the slope and trajectory of this range. Now, this wave right here could be this ABC. A, B, C. That would be equality. So that would mean our A is in, our B is in, and we're still going to get C right at the base of that shelf. So just keep that in mind with your position sizing. Let's look at MTDR. Now, this is just a nice slow grind base. Now I've got all yellow bands here, and the reason why is because we had both sell side and buy side imbalance across the board. So this likes to build off these bases. So in other words, it builds this base. You get this sell side imbalance, you get a buy side imbalance right behind it. You get a sell side imbalance, a buy side imbalance right behind it. You get a sell side imbalance, you get a buy side imbalance right behind it. You get a sell side imbalance what do we have? We don't really have a buy-side imbalance here yet. So my bias is that it heads a little bit higher. I do not like a lot of the strikes on this one. However, cash secured puts are probably the safest play to go from a technical standpoint. Okay, now we updated a few charts. UMAC, I think we get down around $6. With this breakdown, we broke this shelf, but I think it fully recovers. Now, one thing you folks might want to recognize is when we get an extended or an elongated C, it doesn't invalidate the ups. Quite often, it raises it. Reason is the more euphoria on the way down, the more euphoria the slopes on the way up. More people see it and jump on board. That's the difference. So I like the upside on that at this point. All right, looking at United Healthcare, I just added the candles here, really didn't change anything besides that. Note that each of the charts has a date in this, the idea I was trying to give you a chart book that you could follow and have the different charts that are in there. We also consolidated the shooter AI score, risk score, so it didn't take so much space on the screen. And that's pretty much what I have for this week. So let me go ahead and do my plug for Swing Trade Notes at Substack. So we're still kind of feeling our way around with the app, deciding the best way to manage it. It has some features that we like and some other features that we don't. One thing that's very challenging is I really want to do like a full intraday swing trade format. The reason being is the most profitable things in a bear market are going to be short trades, and they'll be short-lived. I mean, we may be in them 6 hours. We may be in them 3 days. When a stock fails, we obviously want to catch a piece of that. Plus, I thoroughly enjoy that more than any other versions of what I do. So now what we're going to be doing is we're going to be doing a weekly Swing Trade Notes article. It's going to be a full version. There will be a mini version that will be on Twitter, right? With a link back to here. And obviously, I probably will keep the full read public because I think everybody needs something like that. So that's something, obviously, you folks at Fundamental Friends who don't necessarily like any of my other work or don't use it, I think Swing Trade Notes might be a good article for you to read every week because it's going to be comprehensive. We cover market tone, we cover the dollar, we cover TLT, we're covering the SPY just like I did it in that note, the NASDAQ. On top of that, we brought in the Dow, we brought in the Russells, we brought in, obviously, the sectors, both on the 5-day view and a year-to-date view. We also bring in the heat maps on a short-term version. And then we also look at, in this particular order, we looked at the year-to-date because sometimes you want to zoom out, look at the bigger picture. And, then we went more into a macro, micro, sort of a fundamental stage analysis kind of thing about where we are. So if you haven't read that, I'd suggest to read it because I think it's very important heading into year-end and next year for your positioning because it's very practical as it applies both the dollar, the treasuries, Bitcoin, and the indices. It sort of connects it all together. And then, we break down crypto. We look at the heat map and the bubbles and the dominance, etc., who led what, where, and what we think will lead for tomorrow kind of thing. We also brought in a year-to-date thing kind of as a bonus there. And then I sort of give a tactical outlook. So that is, sort of the look. Now, one thing I'd like to point out, there is a coupon code currently on Twitter. Now, this is our Black Friday deal. And really my thought here was to give everybody a shot to jump on board and give it a try through the first part of the year, the first 2 weeks of the year. Realize January is going to be a busy month, and I think that's a good time. So roughly you'll get it. Buy 1 month, get 1 month free. Now, what I'll also do is I'll include for anyone in Fundamental Trends, if you want to upgrade to the annual promotion after that, I'll let you do that because I think it's fair. I'll have that coupon posted on December 15th for those of you who don't take advantage of the Black Friday offer. But I think it's a great way to try and get your feet wet. Some of you know what I do, but that way we can sort of see whether or not you want to stick with it or not. I hope that you do. I appreciate any support, those of you who have already signed up. We did update everybody's account who signed up for the monthly subscriptions already to take advantage of this BOGO offer. So outside of that, folks, have a great Thanksgiving. I'll be in and out of chat this week, but I'll be there. Great trading. Until next time.